Imagine waking up tomorrow and finding out the entire world is broke. Not just one country, not just a few struggling economies, every country. The United States owes trillions. Japan owes even more relative to its economy. Developing countries owe money. Rich countries owe money. Even governments that lend money also owe money. Add it all together, and global debt now exceeds $300 trillion. And that raises a strange, almost uncomfortable question. If every country is in debt, who exactly is the world paying back? Because debt always has two sides, a borrower and a lender. Someone owes, someone is owed. So who's on the other side of the ledger? To understand this, we have to start with how governments actually borrow money. When a country needs funds, maybe to build infrastructure, fund healthcare, or stimulate the economy, it usually doesn't print the money directly. Instead, it sells something called government bonds. A bond is basically an IOU. The government says, lend us money today and we'll pay you back later, with interest. These bonds are then bought by investors. Banks, pension funds, insurance companies, investment funds, sometimes even ordinary citizens, and yes, sometimes other governments. So when people say the United States owes money, what they really mean is that the U.S. government has issued trillions of dollars in bonds that are held by investors around the world. Some are held domestically, some are held internationally. Japan owns U.S. debt. The United Kingdom owns U.S. debt. China owns U.S. debt. But here's where things start getting strange, because those same countries also issue their own debt. Japan owes money, the UK owes money, China owes money. Which means the global financial system starts to look less like a simple borrower-lender relationship and more like a massive web of IOUs. Countries owe investors, investors include banks, banks hold government bonds, pension funds hold government bonds, central banks hold government bonds, and central banks sometimes buy government debt using newly created money. Yes, really. For example, during financial crises like the 2008 global financial crisis or the COVID-19 pandemic, central banks stepped in and bought huge amounts of government bonds to stabilize the economy. Institutions like the Federal Reserve, the European Central Bank, and the Bank of Japan effectively became some of the largest holders of government debt. So, at times, governments are partly borrowing from institutions connected to their own monetary system, which sounds a bit like owing money to yourself. But that's only part of the story, because global debt doesn't only belong to governments. Corporations borrow, households borrow, banks borrow from each other. Financial institutions lend and re-lend money across borders. The result is a massive interconnected credit system. Think of it like a gigantic circular flow of promises. Your pension fund buys government bonds. The government spends that money into the economy. Businesses grow, workers earn salaries, those workers contribute back into pension funds. The money keeps circulating, and as long as the system keeps moving, the debt is manageable. Because most debt is never meant to be fully paid off all at once. Instead, old debt is rolled into new debt. Governments issue new bonds to pay off maturing ones, economies grow, inflation slowly reduces the real burden of older debt. In other words, the system runs on continuous refinancing, not final repayment. This is why some economists describe the global financial system as a debt-based system. Credit expands as economies grow. Governments borrow to stimulate growth, investors lend because they need safe assets, banks create loans that expand the money supply. Debt isn't just a byproduct of the system, it's one of the system's core engines. Which brings us back to that uncomfortable question. If every country is in debt, who does the world owe? The surprising answer is, mostly, it owes itself. Governments owe investors. Investors are often citizens, pension funds, banks, or institutions tied to the same economies that issued the debt in the first place. It's a global network of mutual obligations. But this system depends on something fragile: trust. Trust that governments will keep paying interest, trust that economies will keep growing, trust that currencies will hold value, trust that new debt can always replace old debt. As long as that trust holds, the system works. But if confidence ever cracks, if investors suddenly doubt that debts can be managed or rolled over, the entire network can tighten at once. Credit freezes, borrowing costs spike, markets panic. We've seen glimpses of this before during crises. Which leaves us with a final, unsettling thought. The global economy runs on trillions of dollars of promises. Promises to repay later, promises that growth will continue, promises that trust will hold. But what happens to a system built on debt if one day the world stops believing those promises?